Welcome back to SF Live, everybody. Happy New Year, January 2nd. We're recording this episode with our good friend Dave Collum, and he's going to join us on screen in a few short seconds. But first, I want to say a couple things, introduce you to the episode, because we're still doing a bit of a year in review and trying to do a bit of an outlook to 2023. 2022 was impossible to forecast. I don't think 2023 will be much easier, but I'll leave that up to Dave to give us his ideas of what is going to happen in the next 12 months. But we had some great guests on already. We will have some more great guests on here on the show. Alistair McLeod comes to mind. We had Jim Urio. We had Rick Rule and others. So make sure to subscribe to the channel. Hit that like button and, of course, comment. What do you think will happen in 2023? And maybe what was your most successful trade in 2022? I know it wasn't easy with the main markets going down about 20%, gold being flat, precious metals besides silver also flat. So let us know what you think. I really want to hear from you, and now I want to hear from my guest. And Dave, it's great to see you again here. We only spoken a couple months ago, but Happy New Year and welcome on the program.
Yeah, glad to be back. This must be our third or fourth. I'm not sure which.
I think it's the third one. The third one. If you
Right.
include the time we saw each other in New Orleans, then it's our fourth interaction, I guess. But
Right. I noticed your guest list had a New Orleans overlap. Yeah, so 2022. So as I do every year, although I'm not sure I'm ever going to do it again because I have a pretty bad looking fall schedule this coming up, but I write an annual review of what happened. It's a kind of a soul wrenching thing to do. 2021, someone told me it was 329 printed pages, 319 printed pages. This one, I think if I printed it out, it would be about 150. There was going to be another 50 or 60, and I decided to just leave it on the cutting room floor. It was going to be our COVID and vaccines and stuff, and I've decided that story is being told, and it's going to be told by many, many people. And I just didn't think that what I brought to the table was worth taking people's time. And so you should be paying attention to it, in my opinion. I think there's a lot of plots there, but there's just thousands of people looking in on it. So I just let it go.
There's a lot unfolding in the daily news here as well, so that we're hearing about. So really, really interesting. How long did it take you to write the year in review? I have to admit, like prior to our episode, I wanted to read it over the weekend, but I made it to page 50. Or was just too much going on with New Year's and kids running around.
Well, it's hard to measure because I collect data through the year. In fact, one of the problems I'm having is thinking about, if I don't write it, will I collect the data as well as I do, and therefore will I be as intellectually grounded as I am as I'm trying to prepare to write the thing. I tend to not let things go by. So I'm pondering that aspect of it. For me, it's educational. So I collect the data, and then sometime in the early fall, I start culling it and collating it and putting it together. And I usually have about 500 to 700 pages of links and quotes and notes and all sorts of stuff. And it's unsorted. It's just I paste them sequentially as they hit my field of view. This year, the thing that lit me up was the war in Ukraine, and so that's the core, and that's the part you didn't get to because you were
part two, right?
That's part two. Yeah. And it's I would say the most original part. So I can write about inflation. I think I bring sort of an original view, but the Ukraine story was one where I took the very few people who were going at it the way I thought it should be addressed, and then I collated all that. I put all their stories together into I think a pretty coherent story. To foreshadow it, I take Putin's side, and so I think NATO's at fault. I think Putin was responding as a rational individual in a NATO-dominated world, in which I think NATO picked the fight, wanted the fight, and is throwing Ukraine's under the bus, much the way Longshanks threw the Irish under the bus in Braveheart. He said he didn't care if they died, and I think NATO's doing the same thing with Ukraine.
Interesting. Yeah. So before we go on, actually, let's let our listeners know where we can find your piece. Like, is it just on Zerohedge, or have you published it elsewhere?
It originally publishes at Peak Prosperity. It's my It's my pinned tweet on Twitter. So if you go to David B. Collum on Twitter, you can find it there. And then, of course, it's a zero hedge. And the zero hedge one this year was well formatted. Usually there's kind of a shoddier formatting where they just blast it up. And they seem to have captured the peak prosperity formatting this year for some reason.
There was I noticed that it was the PDF was quite well correlated, as you said. Like it looked pretty good on the website. I think Lawrence Lepard retweeted it when that's how I saw it the other day. So I dove into it. So there was. I'll actually link to it in the show notes below. I'll make sure to get to that. But let's dive deeper into some of the details there, David. And investing is a big topic there for you. And maybe we'll dive in. Like, what was one of the biggest lessons you learned in 2022 that you didn't maybe expect to learn, or that you took away from last year?
Well, I think the title is All Roads Lead to Ukraine, but the original title was going to be A Year in Transition. And the reason is because I think many years there's things that happen and they seem to finish up and you can stitch them together and say, here's the story. And 2022 seemed to be a bunch of things that started and didn't finish. And so, for example, I think the markets aren't even close to being done inflicting pain and suffering. I think this is going to be an epic bear market. I think the inflation is deeply into the DNA of the system. And so we might come off of the most egregiously high inflation, or it could pick up in a very big way. It's very hard to know, but I don't think they're just going to dial it back in 6 months to a 2% inflation rate. And I think they might pretend like they want 5, and that might even be true for all I know. Those psychopaths, you never know what they're up to. But so I think there's a lot of unfinished work. I think again, the Ukraine war could go peter out or become World War III. So there's just a whole bunch of things that are unfinished.
Yeah, it's like always. I love how people see the year end sort of as a clean cut. Okay, let's start fresh. It was the same with. It came with COVID as well. Everybody said, "Oh, 2021 is going to be different than 2020," and then it was worse than 2020. It felt like, and 2022 the same. And is that part of the unfinished business? Is that just I don't know. Maybe I'm getting a bit philosophical here, but is it just a human mindset thing that we try to wrap up things and start anew?
I think it is actually, and I also think that we're kind of controlled by the news cycle. So I once had a colleague said, "You ever notice nothing bad happens on the weekend?" and that's because the news is talking about what happened during the week. And I think there's some truth in that, where the media controls what we see and when we see it. And so, this was the 2022 elections, and so the year was dominated by that garbage. But I think the thing I've been laboring over enormously is that it seems as though leaders in the world, no matter who they are making precisely the wrong decisions. If they're trying to get it right, they're not only not getting it right, they're getting it dead wrong. And so, examples are stupid things like, we're potentially facing famines, right? Because of the energy problems and stuff like that. And then the Dutch tell their farmers to stop growing food. Why would they do that, right? Justin Trudeau used to talk about the importance of having, open and fair debate about stuff. And then he stepped on the truckers. That was a story that did finish. And that was a very straightforward interpretation, actually. So the truckers showed it was the most peaceful protest in history, huge and peaceful and heartwarming. I did a Twitter poll. 97% of my Twitter feed supported the truckers. They could not give the win to the truckers. So you can't. The elite. I hate the phrase because it throws you right down the rabbit hole fast. But let's call them the elite. They're happy to have us arguing and screaming at each other. They do not like us screaming up at them and firing up at them, and so they don't want to get hit in the butt with a clean shot. And so they're happy to have lateral conflict, not vertical conflict. And the truckers were about to inflict vertical pain. And I think because there's truckers in every country, all of a sudden it became this real do or die battle, such that you do not want the truckers. They could not let the truckers win because that would provide an unimaginable power to the deplorables. And as a consequence, they squashed them like bugs. I mean, they squashed them like a bunch of Stalinists. And all the things they did are staggeringly bad. The things that Trudeau and Chrystia Freeland, who actually is a Nazi, I think, not just, that's not a metaphorical Nazi, she's a Ukrainian Nazi, actually. And she's in the queue to become Secretary General of NATO. And there's nothing about her that warms my heart. She's Klaus Schwab's twin sister or something. You know, she stepped on those truckers like there was no tomorrow. I call her trucker crusher. And so there are strange things going on in the world. It feels like, you know, we're supposed to eat bugs, right? We've all heard we're supposed to eat bugs. We're going to own nothing. The World Economic Forum is real. They say things that are absurd. One of their catchphrases this year was, there's no reason why life has to be fulfilling. Who would ever say that? Right. So in 2021, I wrote about rising authoritarianism, and I did not repeat that topic because I did it adequately in 2021. I think it's very real. I think we're on the cusp of potentially a really global authoritarian state. When the internet was starting to get legs, I kind of recognized it as democracy's greatest hope and biggest risk. And so the battle for the digital world was on, and I think we've lost the battle. And the hodlers think they're going to beat them. I don't think they are, but I root for them. I mean, I hope someone beats these guys. But so it's a little depressing. 2021 sent me soaring. I mean, I was so depressed. I didn't even send out the year in review to friends. I just finished it, 319 pages, just wrapped it and left it. And 2021, 2022, I tried to ignore it. I tried to ignore that risk, but it's still there. It's very much there, and I think that's what, you know, the Ukraine war is about. And so investing's tricky, very tricky.
Absolutely. That's it's not an easy feat these days. I was joking with Andy Schechtman the other day, and he's the CEO of a bullion dealer, and we were talking about, like, macro events used to happen maybe 2, 3, 4 times a year, like the bigger ones. Now it feels like they're happening daily, maybe pushed by social media, and everybody's trying to make an elephant out of an ant, right? But social media, I think, is fueling macro events as well. Dave, like, looking back at 22, is there anything that really, really surprised you? Like something, like, also on the investing side, like maybe Fed's reaction, or like inactivity or activity to the degree, anything in the markets? Did it surprise you that gold was flat? Like, and anything in that direction? Is there anything that stood out?
Markets always do what they're supposed to do, but just not when, is a phrase that someone used. And so at this point, nothing surprised. I made some good calls along through the years. I think what got legs underneath me in the world of finance was by making some calls that were sort of off the charts pretty good. And blind nut found a squirrel, right? I mean, it's not necessarily due to genius by any stretch, but I remember in 2007 in March, I thought the banking system was now finally ready to collapse. I predicted in 2002, believe it or not, in an email to a friend at Goldman. I saved the email. I've got the evidence. And it looked like it was finally ready to collapse. And then it still took, you know, a year and a half, 2 years. I mean, and so it's going to take its time. People who think the bear market is over, I think, are going to be so beaten up by the time this is over. So my baseline model right now, if you say, look, you got to put all your money on a bet, describe the scenario, winner takes all, closest to the pin in golf, whatever you want to call it, is a 20-year bear market.
Okay. That's long. What's the longest in history? I need to look that up. That's an interesting one, like longest bear market in history.
Well, it depends on how you define it. A lot of people like to define bear markets, and then they'd rather have a whole bunch of bear markets instead of a big, huge window that's just really one big bear market. Yeah. So we've had a bull market, in my opinion, since 1981, and it's been a secular bull market. It is ridden the back of demographics. It's ridden the back of interest rates dropping from 16 to 0. It's ridden the back of China coming out and giving us free labor, essentially. It's ridden the back of Russia coming out and giving us almost free resources. And I think all those tailwinds are gone. And so I don't think the next 40 years can do it. If you look at the S&P from 81, I got a discussion yesterday, last couple of days actually, with Gene Epstein of Barron's, right? That's why I love social media. And he said something about, he showed a gold plot where gold had treaded water. And I said, but you can do that for any asset class, right? And he said, it doesn't hedge inflation. I go, well, neither has the DAX, neither has the CAC, neither has any of those. And he started giving me fairly traditional responses using Jeremy Siegel logic. And I said, if you look at the secular bull market from 81 to 2022, it's done very well, but about 3.5% annualized is valuation expansion, and so what looks like about a 6% a year gain is more of a 3% a year gain. Because valuation expansion will, what happens? So what happens in the next 40 years if we do a negative 3% valuation contraction? 3% year after year after year. That'd be a disaster.
It would be, because it's like I was thinking. I wrote down 401k as one of the next points, like because people will just, like, in the U.S. in particular, you don't have a social system like we have in Germany here. Like you have to invest in the market. You have to put your money in the stock market.
Eat what you kill. Eat what you kill.
Exactly. Right. So even compound annual growth rate of minus 3%, it's just going to kill you, as you said.
Well, and so I created a plot one day, and I've probably mentioned this on each of the podcasts, but people forget. I like to ask the question. A couple of questions I like to ask is when I look at a high, or I look at like the CAC or whatever, I don't ask, how much is it off the low? I asked when was the first time that it reached that value? And it turns out that for things like the CAC and the DAX, it was 20 years ago. So we've treaded water for 20 years. If you take the US market, you inflation adjust it, and then you look at the highs, 06, 29, 67, and you ask, and that's 67 is not that's a later one. There's about three critical ones. You inflation adjust it, and you ask not when did it, after dropping like a demon, when did it recover, but rather when did it reach that peak for the last time before lifting off and really giving you a true return. And it turns out that there's, I think it's 3 stretches in the 20th century where the market treaded water, where it went down and then went up to pretty good numbers, then came back down and touched the same value 3 times, and for periods that lasted 45 to 75 years. Capital gains inflation adjusted 0 for 45 to 75 years. Now, here's the problem, is that could happen again. And so all you get are dividends. And so you say, okay, but dividends are okay. And you go, yeah, but right now they're only 2%. They used to be, first half of the 20th century, they're more like 4%, which is why, fully consistent with the idea that I think the markets are 2x overvalued. So I think fair value, historical fair value, which is required to get historical returns, is half right now. I think the high teens is at this point historical fair value for the S&P. If we go way below it, the floor, I'd be selling all the way to 0, right? I mean, it could just get so ugly, and it should go below fair value, right? If historical fair value is a mean,
well,
then
the market
tell me
overreacts as well, right?
Yeah, and for it to be the mean, you got to spend half your time statistically weighted below the mean. So we've had a 40-year run. That's one of the worst recency biases. I think the market lifted off of fair value in a serious way and never looked back, starting in 1994. Every value, I look at about 25 valuation metrics, and every one of them points to 94 as the period in which it became sort of an Elon Musk Starship liftoff. And it just barely touched fair value in 09, for example, just barely spent about a month below fair value. So I think if it really grinds us to dust the way a bear market's going to do it, it's not only going to take the price down to unimaginable levels, but it's going to take unimaginable numbers of years to do it.
Yeah, interesting. Like, it brings me sort of to the next question as well, and I warned you I'd ask you. It's like, it's more of a philosophical one as well. Like, a recession versus stagflation, and how does that impact the market, and what kind of scenario do you see playing out here, maybe in 2023 or 24, if we wanted to look a little further ahead? There, do you have some thoughts on that?
Well, first, I wrote quite a bit about inflation, but again, I try to take the oddball look. I looked at, for example, when your salary doesn't keep up with inflation. If you're kind of a salaried employee, so every year I get a raise. For 42 years, I've gotten a raise. Back in the 09 crisis, they gave us no raise. Okay, I get it. Times are tough, but what I referred to as an estimated 2.5 million SAT points accumulated by the faculty over their careers. What they didn't notice is, if you're a young guy and you don't get your 3.5% raise, let's say that's what it should have been, that follows you to the rest of your career. So you're not going to get that money back. You're not going to get that raise back. So your salary is going to be 3.5% lower. And then again, this year we got 3.5 when inflation was 8.5. So you just lost another 5% of your salary from this point forward that you're not likely to get back. You're not likely to get a raise that's way above inflation. Employers tend not to do that. And so then the question is, how do you think about that? Well, for just those 2 years, if you're a young punk and then you carry it through the rest of your career, we're talking 2 annual salaries you gave up, 2 annual total salaries you gave up. And people don't think about that. The inflation, no one wins in inflation. So one of the things Twitter was filled with 2 years ago is all these people saying, "Oh, I would love inflation because it'll make my mortgage cheaper." And I go, "Well, okay, is your mortgage cheaper now? Is your mortgage cheaper?" And the answer is no. And if you got an adjustable rate, you're hosed. But let's say you had a fixed rate, you're still paying the same thing. Your salary, except in rare cases, has not kept up with inflation. But you say, okay, but I got maybe bigger than normal, nominally, and so that does make the mortgage a smaller percentage. But then on top of that, my real estate taxes are going up 8% a year each of the next 2 years. I'm told that by the superintendent of the town. I probably shouldn't have said that. And the costs of energy and the costs of insurance and the cost of everything goes up. And so I'm not seeing people on Twitter raving about the miracles of inflation making their life better. And it was really a bunch of inflation neophytes who were making that claim, who never lived through the 70s. Now, I didn't work through the 70s, but I sat at the dinner table with my dad, who was a contractor, and I heard about the evils of inflation the whole way. No,
it's like interesting, like, maybe to jump in. Sorry to cut you off there, Dave, but
yeah, you have
one of the Twitter comments just under the Lawrence Lepard video. And he said, "Oh, he took it too light on Paul Volcker saying, well, 21% was no problem inflation." But he said, "Well, I had 3 jobs working through that, trying to make ends meet during that time." Right? So it's like, it was a tough time. As you said, like, your dad told you probably at the dinner table as well, like, it wasn't as easy, and we don't have any reference really to it. I think we need more. In Germany, it's called Zeitzeugen. Like, we had those, like, witnesses of the war, for example, that are unfortunately all passed away now, but more Zeitzeugen, people that are actually witnesses of the inflation of the late 70s that had to work through it. That'd be interesting context. And I haven't heard many speak up and say, "Okay, this was horrible. Like, I've worked my butt off. I had 3 jobs and I still couldn't make ends meet because I couldn't afford X," right? So
my brother keeps track of everything, and I posted a tweet that I got from my brother, in which he's an accountant, he's retired, and he said that he keeps track of everything. And he said his food bill went up 41% year over year. Jimmy Iorio chimed in and said, well, his restaurant, they keep track too, of course. And he said around 25%. Another accountant said, I keep track just like your brother does, and I got exactly the same number he got. And, you can reduce your food bill by reducing the quality of what you eat, but hedonically that ought to be adjusted back, right? Because now you're eating crap. So the inflation story is an awful story, and the Fed disrespected it. And I got in an interesting argument about a dozen years ago with David Andelfato, who was a vice president of St. Louis Fed. And to his credit, on social media and emails and stuff, he would debate things, right? This was pretty open of David. And he said, curiously, Volcker caused the inflation. And I go, come again? Wait, what are you talking about? And his argument was an interesting one. He said, when you first spank up the rates, and you beat down the economy, that is a deflationary pressure. But now, here's the way to look at it. This is not quite his words. This is how I'm applying words to his thinking, I believe. If you're dumping 15% interest rate into money market accounts all over the country, because that's what you could get, you're pumping a lot of money into the system. And the first thing goes, where's that money come from? And actually, a banker could explain it better than I could, so I'm not going to even try. But if at the end of the year, your bank account that you haven't touched is up 15%, that's inflationary. And so that becomes, in the very least, inflation expectations. And then the other oddity, the thing I take a bat to, is remember stagflation was a term they invented because economists had all said you can't have a stagnating inflation. And I asked the rhetorical question, someone explained to me how a bunch of economists would not realize that if you buy fewer goods with the same salary, how that's not going to cause stagnation. And so it shouldn't have been off their radar. It just shouldn't have been. It's inexcusable, actually. They thought the only time we got inflation is when everything was overheating. That's a dumb idea.
No, there's always two sides to the coin. It's interesting. Like in theory, it makes sense, but I think we'll have to rewrite the history and financial history books based on the last couple of years.
Over and over.
Absolutely.
We'll never learn. Never learn.
Dave, we're a bit of a commodities channel, obviously, here as well. We talk a lot of junior mining, but I want to talk commodities for 2023. And I want to touch on like the war on Ukraine. I don't want to talk about like the political side of it, but sort of the ripple effect it has on the commodity markets, but also deglobalization as well. And sort of your outlook for the commodity market in 2023. I'm thinking of energy, obviously oil and gas, but also the precious metals. What are your thoughts on that?
So I've given up trying to predict the precious metals. So I'm just going to literally let that go by. I have probably 25 or 30% of my total net worth in precious metals. So it's not. What I will tell you, here's a tip for you. I got onto the platinum miners amazingly from a YouTube I just caught. And the guy laid out the case for the platinum miners. I don't know who he is, but the case was great. I looked into it. The three big platinum miners, Imperial, Anglo-American, and Sibanye, they have net cash in the balance sheet. The price of platinum has given them no boost for 20 years. It's just been stagnant as hell. Maybe electric cars are going to take over the world, but I don't believe it at all. I think the electric car story is going to turn out to be a disaster story. And they're making their money off rhodium right now. And I learned that when I in a podcast, I said, I'm bullish. And they're priced like Russian equities. They've got PEs of 5, they've got dividends of 10. They're just ridiculous. Now, there's some geopolitical risk down in South Africa. But a guy sends me an email and says, we're the largest private holder of Sibanye. I'd like to chat. I said, I sure as hell would love to chat with you. And so we spent 2 hours on the phone to discover, I have a cabin up in the Adirondacks, to discover that my cabin's about 5 minutes from his Adirondack house. So we're going to get together. He explained how all these platinum miners work. And so I asked a friend from Royal Bank of Canada to send me what they had on him. He's been great. A guy named Dennis Stanek. He works with Horizon Kinetics. I'm going to give them some money. I can't speak highly enough about Dennis. I can't speak highly enough about Horizon Kinetics. They don't have my money yet because secular bear markets need to rip too many people to shreds before you even should start cherry picking. But I think that those are good buys, and I think that platinum will have a stay in the sun, and I think that even if it doesn't, I'll take 10% dividend. Energy, again, with some great wisdom from a guy named Murray Stahl at Horizon Kinetics, I think energy's got 25 years of running room in front of it. I went bullish on energy when I started to think about it. I owned energy all the way through the noughts. I compounded 13% annualized investing in the noughts when everyone else was getting killed, by being heavily energy and precious metals. It was all energy, precious. I was just hedging inflation with energy, but I caught the bull run. It was just the blind not finding the squirrel again. I got kicked out of the energy by my pension fund, saying it was too speculative. I go, oh, come on, you clowns. Anything good's going to be speculative. But then I picked it up again in 2020 when they kicked Exxon out of the Dow. I said, oh, that's a bottom call. That's insane. Salesforce.com, which is down something like 50%. Exxon's up 80% since they kicked them out, right? This is insane. So in 2020, the Exxon booting from the Dow was the first bottom call. Jesse Felder, who I respect immensely, pointed out that the S&P used to be 16% energy not too many years ago, and now it's 2%. Well, it's probably a little higher now. And so in 2020, I started going in. I tiptoe in, although it was a big enough position that it made a difference. But I don't do Stan Druckenmiller stuff. I don't go, 150% or whatever. I will buy some fraction of an annual salary's worth, and then see how it goes and see how I feel, and then buy some more. But it made a difference this year. So this year I was nominally up slightly, but given what this year was, that's not a bad performance.
Well, you beat the market by a wide margin.
20%.
So
yeah, and I think the days are coming now. When you're buying energy, I think you want to avoid companies that require too much infrastructure development because it's politically incorrect, too much the inflation problem. So I think you want to buy companies that are operationally almost like royalty trusts, where they have the pipes, they have the drills, they have the wells, and they're just pumping increasingly expensive energy out of the ground in increasing demand from consumers. And I also decided in the 2020 window that it was time to go nuke. And so I wrote about nuke this year too. It's a much longer term play in my opinion, but Gehring and Rosenzweig, a two-man operation, have a mutual fund, and I went into that, and that was good this year. So issues that I had that didn't work well because they're generic, and they made up for it pretty well. So.
Yeah, fantastic. Like ticker's GRHIX, I believe. I looked it up actually when I was looking.
Yeah, it's either GRHIX or GHR. I think it's GRHIX, and they have a minimum buy-in if you buy it through them. But there's also a share-based mutual fund, and it was up like 40% or something this year. It did well, but I don't believe price tells you were right. I'm the only investor who doesn't think that because something went up, you were correct. Correct to me is how you analyze the situation. Yeah. And my best buy ever was tobacco from right before the lawsuit was lost, because it was my best. I put some kids through college. That was good. But because the analysis, the analysis was dead right. I nailed it. I stuck it like a Russian gymnast, and I made 700% on WorldCom, but I was dead wrong. Right. So I'm not proud of it. I thank my lucky stars. I made 700% on Dell. I was a tech bull. No one who knows me now they think I'm just lying or something. I was a raging tech bull. I had a couple of 100+% years in the late 90s, but then I went totally tech bear, and I've never looked back.
Yeah. It reminds me of a saying in fantasy football as well. Like, you have the right process, but in the end, the result wasn't what you expected. Right?
But I'll take that. See, I'll take that. I can live with that. If I have the wrong process, I wouldn't forgive myself if it went wrong.
Exactly. Right. I can still look myself in the mirror the next day and it's like, okay, I've done my homework. I've tried. Market didn't see it that way. Right.
That's right.
I got to nail you down on a couple of things. Like, do you have a preferred commodity in 2023? You mentioned uranium. Is that the number one, or do you have another one? Rhodium?
Well, I don't buy the commodities themselves. That's too sketchy for me. I really am an amateur, and profoundly so. And so I just buy the people who have share prices, who mine it, who show cash flow. I am avoiding like the plague any company that has debt, net debt, or company, or at least debt that I don't. If I look at the cash flow, say, okay, these guys can deal with this debt if it becomes a problem. I do not want some company with $40 billion worth of debt. I don't want the leverage. I don't want any of that. So everything I buy lately has had a fortress balance sheet, and I lay it all out in the year review. I go through everything I own
No, it's
and
like I
why
made it
I
through
own
the
it.
investing part. I really like that. So that was good. I like that process. Maybe I should write myself. I should write one as well. Just don't publish it anywhere. So
Well, it's good for
right.
yourself. It's good. It's good to do yourself, because if you can't lay your ideas down coherently and not say, oh, that makes no sense. I got duped on Jaguar mining. I still haven't sold it, but it was a bad idea. Rick Rule pointed that out to me in brutal terms. I got everything but one part right, and the one part was fundamentally wrong.
Oh, interesting. Yeah, I don't want to talk single stocks, but yeah, like you mentioned it to me in maybe first chat. I think May 2022 or so was our first interview. I think you pointed out Jaguar mining. I was like, oh, interesting.
Yeah, it
We're
was a
down in
bad
Brazil.
suggestion. I was doing so many podcasts when I first bought it that I was driving the price, I think, because it's this thinly
That's not
traded
good.
small
Yeah.
cap. No, I know. I was loving that part. I thought I was a genius, but it turns out their ore grade's bad. Their
Yeah.
ore grade didn't hold up, and
Possible
so
maintain rate, yeah. Dave, like maybe as a last question, because we're running a tad. I wouldn't say tad long. It's just always great to have you on. But if there was one call for 2023 that you would make that you want to be known for, what would you put your name on?
a call or an investment?
Like an outlook, a forecast. Like you're like, I'm making this call or prediction that you want to be like in your year in review 2023.
The bear
Is like,
market will continue. The
Yeah.
bear market will continue. Yeah.
I've
been calling for one for a long time, but the problem as it stands is that based on valuation, which is the least favorite metric of the market now. I saw Einhorn give an interview one day, and he said, value investing's gone. You can have a stock with a PE of 5 and no one wants it. And I go, you identify a stock with legitimate PE of 5, just buy it. Just collect the revenue. You're making 20%. Why worry about whether someone else wants it? And so I think there are values out there, but the bear market will take out those share prices too. So you follow the Michael Berry model that says if your default setting should be if it goes down, I'll just hold it. Now, that wouldn't work for Cathie Wood's ARK. It wouldn't work for Facebook, wouldn't work for Tesla, wouldn't work for Netflix, wouldn't work for any of those garbage stocks. And they rose. They were like NFTs, and so I don't want to own those. I think story stocks are done. Murray Stahl, pay attention to Murray Stahl, Horizon Kinetics.
Horizon Kinetics. Okay, yeah.
He says the age of finance is over. Was a quote of his. The age of monetary policy is over. He thinks the Fed is finally going to lose its groove. They will not be able to control the system the way they have. And I think those guys made like 35% this year. Now, so my unwillingness to give money because I'm waiting for the bear to really show up have cost me a fortune. So.
No, I've been predicting a bear market for almost 10 years now. And
you were correct. You were correct by fundamental analysis.
Yeah, just 10 years too early. Because I told that story on a podcast before, but I've got 3 kids, right? And I've been waiting to invest in the market because I was expecting.
You should have invested in condoms and birth control pills. Huh?
That too. But maybe they'll be my retirement plan. Maybe that works out. I don't know. That's option plan B. Terrible joke. Fantastic. Dave, what a wonderful conversation. I always enjoy having you on the program. Thank you so much for your time. And again, Happy New Year. All the best in 2023.
And thank you for inviting me, and I appreciate it. You're the first of 5 in a row this week, so
I'll make sure to put it out tonight.
By the end of the week, I'm going to be just babbling absolutely incoherently, which one could argue I started the week that way, but it's going to get worse. It's going to get worse.
I was planning to put it out tomorrow, but now that you mentioned it, I'll put it out tonight.
I wouldn't sit on it.
Fantastic. Thank you so much. All the best, and we'll catch up later in maybe early Q2 and see how everything's playing out.
You got it.
Fantastic.
Sounds good.
Fantastic. Everybody else, thank you so much for joining in and tuning in to the SF Live here. We were joined by the fantastic Dave Collum. Make sure to follow him on Twitter. Make sure to also read his year in review. It's quite insightful, and I'll link to it here in the show notes below. Of course, leave a comment, leave a like. How are you planning to get through 2023? Love to hear from you. I read all the comments, so make sure to do that. And make sure to, as I said, subscribe to the channel. We got lots more lined up this week and next week, so can't wait to hear from you and see you on the show. Thank you so much, and we'll be back soon.